Good morning, everybody. It's Joe Neighbour from Signal Centre with the latest roundup on all things oil. So, going to talk through some charts, going to talk about the latest headlines coming out of the energy market. In terms of the overnight news, oil was again underpinned by expectations of robust demand and supply shortages. High oil price continued to gain firm support from the expectations that extremely high prices for coal and natural gas would trigger increased oil demand from power producers. We've also seen some colder conditions in China, which has sparked expectations of increased energy imports. Prices were also underpinned yesterday by the weaker dollar, although there were some pressures for a correction after strong gains. The WTI settled at around about $82.50, near the highs of $83 a barrel. The API data recorded an inventory build of 3.3 million barrels, although gasoline stocks did decline. WTI edged lower to $82 a barrel on the news, with Brent around 84.60. So in front of you at the moment we have the daily chart for WTI. As you can see, it still looks very bullish indeed. We are trading in a bullish channel on the daily chart, having exited this minor corrective phase that underwent between July to kind of September time. We saw a really impulsive break to the upside, and we haven't seen anything in the way of a correction since. So things are looking pretty strong. We are trading up around the highs, the highest levels that we've seen for some time. I've got some red lines drawn on the chart here to indicate that there are some resistance levels nearby at 84.99 and at 86.39. Now, just to give you an idea of when these were previously relevant, I'm just going to flick quickly to the weekly chart. And by scanning back to the left-hand side, you can see there's a couple of levels here that we are potentially going to target. So we've got some key lows from back in October 2012 and another key low there from the 15th of April in 2013. So those are the next levels that I'd be looking at on a technical basis to consider potentially fading the move or looking for opportunities for taking profits if you've been long throughout this big move to the upside. So looking at things on an intraday basis, because obviously people will be looking for opportunities all the time when it comes to oil, there are some potentially interesting formations beginning to set up on the intraday charts. Now, what I have here is an hourly chart on WTI, and what I'm starting to notice is that we could be in the process of forming potentially a double top pattern here on the oil chart. It is only potential because we cannot say it's a double top until it's confirmed a break of this neckline. I've got the neckline drawn in today at 81.08. And I think if we can see prices move through that level to the downside in a convincing manner, then we may set ourselves up for a minor correction on oil. I don't expect it to be any sort of massive turnaround in sentiment or a huge reversal. I think it just may be a case of letting off some steam and allowing some dip buys to get back in. So if this level at 81.80 is broken, then what we can do is try and project some downside targets using the Fibonacci extension tool, and we'd be looking for 100% of this move on the downside. So we take a measurement from the high of the proposed double top down to the neckline, project that lower, and that comes in today at 79.12. Which, looking at this on level and looking to the left hand side, we can actually see that there are some reasonable support levels down here as well to potentially target. So potential for a bit of a correction in oil, by no means a foregone conclusion. Overall, the demand obviously is an issue, and we are going to see higher prices, I think, over the more medium term. But in the short term, there may be some opportunities for traders who have been maybe sitting on their hands with this for the recent price action that we've seen. Just quickly want to look at the news sentiment at the moment with regards to oil. This is the dashboard from Acuity Trading. Over the last hour, the news has been considered to be a bit more bearish than it has bullish. This is indicated here by this donut, the red indicating bearish news flow, the red indicating bullish news flow. Down here we have the price versus the sentiment. As you can see in white, the price has continued to trend higher. The sentiment's been a little bit wobbly. We haven't really seen much correlation between the two, although you could say that the sentiment is continuing to push higher at present. If we take a look at things on a daily basis, we can also see here that the news is more bearish at the moment over the last 24 hours. That's not always a clue on its own, but if we do see a breakdown of this double top and we continue to see negative news sentiment, then that could be a clue that there may be some opportunities for the short sellers in this in the very short term. Hopefully that was insightful for you guys. I'll be back tomorrow with an FX roundup, and then next week with some more oil related news too. Until then, trade safe everybody and have a great day. Goodbye.